Welcome back. We have a news alert on silicon maker Synopsys. The company suspending its guidance just a day after providing it. The stock is off the session lows. Kristina Partsinevelos is back with more. Kristina.
That's right, Kelly. So Synopsys, you mentioned it, just suspended quarterly and full year guidance after receiving this letter from the Commerce Department about new export restrictions to China. But the timing is telling. Just yesterday on their earnings call, the executive said they expected lower China revenues, but claimed they hadn't received any official notice about export controls. Today, that changed, and that's why you're seeing the stock dip about almost 2% right now. But this really hits close to home for Synopsys, since China represents about 14% of their revenue, and the company told me that just yesterday. The company, much like Cadence, makes the essential software that designs advanced chips, basically the blueprint tools that chip makers can't do without. The U.S. government is clearly escalating its efforts to kneecap China's AI ambitions. We've already seen licensing requirements slam NVIDIA, $10.5 billion in lost sales just in the first half of the year, and AMD's advanced AI chip exports all to China. But today's move targeting design software shows Washington realizes that just blocking finished chips isn't enough. The real concern is that China's homegrown players like Huawei keep making progress with their own advanced chips despite the restrictions. And so that's why you're having the chip and hardware world caught in the middle of this geopolitical dialogue between both countries.
Can we talk very quickly about, it's a heck of a story. Let's talk very quickly about NVIDIA. I mean, NVIDIA is not soaring, but the stock is higher. The numbers last night, I know Jensen Huang has expressed some concerns. He talked about it with Jim last night on Mad. But overall, NVIDIA is having a pretty good day. I think on most days, Kristina, this would have been our top story.
Yes, and that's because NVIDIA is having a good day because they were able to show that even with the China export restrictions, which really they wrote off about $4.5 billion in Q1 for inventory losses. They lost $2.5 billion in sales in Q1. They are going to lose $8 billion in sales in Q2. Despite all of that, the company still said that they are selling Blackwell and ramping up at a record pace. It's about 70% of their data center sales. Blackwell's their latest iteration. So things are doing really good outside of China. And so that's the positive, that they're de-risking China right now. And that's why you're seeing the stock move a little bit higher, about 3%.